Good evening, everyone. Are we live? Hello. Hello. Welcome in. Welcome in. This is our Friday night power chat with all the ladies who want to chime in on tonight. Make sure to share this via our Facebook and YouTube pages. We want to empower women tonight, this evening, on freedom and freedom in their finances as it relates to the future. So we've been having a blast all week long with Woman Up 2025. We've been unlocking a lot of things, and tonight we're going to unlock a lot of wisdom and knowledge as it relates to our finances so that we can see the manifestations of God doing exceedingly abundantly above all that we can ever ask or think. So, we are graced with so many wise women on tonight. One of them is Judge Brittany Bryan Jordan. She will be hosting this power chat, this amazing conversation. So, I'm going to go ahead and give it over to her. You all enjoy.
Thank you so much, Lady Ellis. And thank you so much for hosting this amazing panel of women that I am just so blessed to be able to moderate for. So, welcome to the United Christian Faith Ministries Woman Up Week 2025. Tonight, our discussion topic is the lady, her future, and her finances. Power chat. I am Judge Jordan, as Lady Ellis just stated, and we have our panelists who will give their name and career roles. I'm going to list them, and then I will give each woman a second, maybe about a minute or two, so we can get to the meat and potatoes of the presentation to just tell you a little bit about themselves. We have Miss Charlie Fortson.
Hi, good evening, everyone. It's a pleasure and a privilege to be here. Again, my name is Charlie Fortson. I am a professor at Southern University Law Center. One of the classes that I teach is Wills and Trusts. And I also am the owner of a Fortson law firm. And one of my primary practice areas is estate planning. So I work with individuals as well as business owners, helping them to put together an estate plan. And so just happy to be here and excited to talk about this for women.
Thank you so much, Attorney Fortson, and we are blessed to have you. Next, I will introduce Miss Yvonne Bay.
Bay, and I'm actually a licensed financial representative, set to help families and business owners with setting up their wealth building plans, insurance plans to investment to retirement, and just being able to take care of the entire family, not only just providing them plans, but educating them so that way they know what they have. All right, and I enjoy being here this evening. Thank you.
Thank you so much. Next, we have Attorney Andrea Morrison Vance. Good evening, Mrs. Vance.
Good evening. Thank you, Judge Jordan, for that great introduction. I am Attorney Andrea Morrison Vance, and I am in private practice. My law firm is my name. I specialize also in estate planning. My focus is helping our community understand the importance of estate planning based on previous situations in our past with our community where our families have lost the ability to generate wealth and to keep that wealth in the family. And so I'm excited tonight to be a part of this conversation, and hopefully I can share some of my wisdom in helping our families to generate or plan for generational wealth down the road.
Thank you so much. After those amazing introductions, I know we are all excited to get to the questions. And just so everyone has an overview of what we will be covering tonight, we will be covering general legal and financial planning for women, wealth protection and estate planning, retirement and long-term financial security, as well as business and career focused financial planning. So let's get right to it. What are the most important financial and legal documents that every woman should have in place? I will start this with Attorney Fortson.
Okay. So I think it depends on what this woman is doing. So if you are just looking at it from just the personal aspect, then you want to make sure that you have your estate plan in place. So that may include a will or a trust, your healthcare directive, power of attorney or a mandate. But then also, if you're in business, you want to make sure that you've got bylaws and an operating agreement. And so that's what's really important. From a legal perspective.
Thank you so much, Miss Bay.
For number one, looking at that, we definitely want to have birth certificates on hand, social security cards, passports, and even for your children. Okay. In the last month and a half, I've helped women with their older kids try to get their birth certificates. So if you have children, you need to have a copy of those things on hand, just in case.
Thank you so much. I am going to move to the next question, and I'm going to start this question with you, Attorney Vance. How can women ensure financial independence and security regardless of their marital status?
Okay, so I think that financial independence and security is very important for women. And I think that the starting point would be for them to set clear financial goals. Set a budget, live by that budget, look at your investments. If you're not investing, begin investing no matter how small. You want to start investing early rather than later. You want to ensure that you have an emergency fund available. So that when things happen, and we know things happen, that you are not robbing Peter to pay Paul, that you have the funding available if your car breaks down, or if you need those new tires that we should all be planning for, because we know we have to change out our tires every now and again on our vehicles. But actually have an emergency fund in place. If something breaks at the house, you want to not have to go into your regular bank account that you're using to pay current expenses, but you want to go into that emergency fund and be able to take care of that. You want to make sure that you maintain your debt levels, that you look at, the debt that you have. Right now, we're all experiencing the drastic increase in interest rates. I have a few credit cards where the interest rate was one thing last year, and it has grown exponentially, which then increases that monthly payment that you have to make. So you may go from paying $100 a month on a credit card to paying $300 a month, depending upon how that interest rate has skyrocketed. You want to make sure that you plan for your retirement, and that you look into ways to protect your assets, like having insurance. Sometimes we think insurance is a burden, but insurance can be a lifesaver if you've planned and budgeted for insurance in your life, and just basically staying involved and aware of your finances. Don't not pay attention to what's going on with your bank account or your bills, your credit cards. You want to pay attention to those things.
Let me ask you this to expound upon that, Attorney Vance. You said something very important when you brought up the emergency fund. So what I will ask specifically, because the thing is, everyone's income is not the same. So when you just put it out there and you say an emergency fund, what would be a range of what you would say an emergency fund should be?
Thank you so much, Judge Jordan, for asking that question. I will give you an example. When I was younger, raising my babies in my 20s, I didn't make a lot of money, nor did my their father at the time. And so what I did was, and I'm just using this simple example, for Christmas, just being able to make sure that I could provide for my children for Christmas, the credit union had a savings account that you could set up and put money into each week or each month. And then at the end of the year, right before Christmas, they would then issue a check to make sure that you had those funds available for Christmas, or you could put that money back into the account and keep it rolling for the next year. So I don't think that there is a set amount or a target amount. It's just based on how much you're able to tuck away each month or each week to say that I'm not going to touch this money and it's going to be there for me when I need it. I think any amount makes a difference when you face an emergency and you cannot afford to not pay your mortgage or not pay your car note or not put food on the table. Having that extra on the side, no matter how small or large, matters.
Absolutely. So I will bring the same question to Miss Bay. How can women
Yes.
ensure financial independence and security regardless of their marital status?
Well, to add to what she said, being able to contribute to your 401k plan on your job, at least to the point where you're putting in enough to make sure that you're getting that match, okay, that the company is offering. That's free money out there. Also, opening and contributing to a Roth independent retirement account, okay, so that's the Roth IRA. Looking at that, you have, of course, higher rates of return on there. So being able to kind of contribute to there consistently will definitely supplement for retirement. And guess what? I'm able to help set up accounts with as little as $50 a month. Statistics say that just a little over 10% of Americans retire with $1 million in their retirement account. With the average really of being about 200,000 return. And we think about what's going on now. That's not going to carry people far. So with discipline and a plan, you can far exceed this. I know the numbers. I'm looking at it over here. So you will actually be amazed at what $50 a week contributing to that Roth IRA would do to you exponentially. So definitely, contribute to that. And then I'll say, check and build your credit history. Okay, and then, of course, adding having access to a credit card with no annual fees and providing rewards points and
Now,
cash
when
for you.
you bring up credit card, I have to go into that because you just saying have a credit card for some people who have it's
Mhm.
been preached to them, do not get
No.
that credit card, do not get that credit card. We all knew in college they would have tables set up for us to get credit cards and start the debt of our lives. When
Yes.
you say get a credit card, can you expound a little bit upon
Yes.
where the 30%, as we all know? Can you expound a little bit upon it to make sure that people understand that?
Understand. Well, the thing is, raise your hand if you shop online. Okay. We do not want to put our debit cards on, those sites, so having a credit card, guys, and what I preach to my children, if you don't have it in your account, please don't spend it. It's there so that way it keeps your identity safe, when you're shopping online. And then you what? Pay that off. Pay
Mhm.
that off. So, just having good practices such as that can help build your credit, actually.
Okay, so let's transition with you, Miss Bay, into the next question. So, what exactly is estate planning and why is it important? And this is a two-part question. So, what is estate planning and why is it important, as well as how can women ensure they are adequately represented in estate and financial planning discussions with their spouses or partners? Because
Huh?
that's extremely important when we are not at certain meetings that we need to be at the table at those meetings. So can you answer that question?
Well, I can just start just a little bit, with that, just being able to put things in perspective so that in the event something does happen, we know where, who's supposed to do what, who's supposed to get what, so that way, families aren't in turmoil during those times. So definitely putting something in place so that way we can allocate, what funds and what properties and things are being used for what.
Thank you so much. I will then go to Attorney Fortson. Same question for you. I'll repeat it. What is estate planning and why is it important? And the second part of that is, how can women ensure they are adequately represented in estate and financial planning discussions with their spouses or partners?
So I think so to answer the first question, estate planning is this process of being able to, identify the assets that you have in place, being able to manage those, or at least set up a strategy for how you're going to manage it. But then also coming up with your distribution plan. Who do you want to get what in what increments, how often. Those are things that you would do with your estate plan. Now, I think when it comes to women, you really have to look at it from a generational aspect. So I think if you look at the women who are in that baby boomers category, historically, they really were not, most women were not involved in the finances in that generation. So you had the men who were making all of the financial decisions. They knew where all of the assets were. And so what happened or what happens and what has happened is, when those men pass away, if they go first, the women really don't know what to do. They don't know where the accounts are. They don't know what all of the assets are. They don't know how the decisions were being made, what decisions they need to make to continue to live a particular way. So I think, for that generation, it's really about, just talking to your spouse and understanding what's in place, and having, and how are things titled? Are you on that account? Are you on that deed? Where are all of the investments? Who are the beneficiaries? Where's the will? So all of those things.
So, Attorney Fortson, you're saying it is okay to ask our husband or our spouse
I believe
those questions?
Marriage is a partnership, regardless of your generation, right?
Thank you.
So, communication should be open, regardless. I do understand that with that baby boomer generation, sometimes it feels a little territorial, and men are a bit reluctant to share the information. But the conversation needs to be had. And then even as an attorney who would advise someone who's making an estate plan in that generation, list your assets, put it in a folder, a binder, so that when you pass, someone can easily find everything that is, available. The other thing is, when you are looking at the other generation. So I think as you start to move down and you get to the Generation X and Generation Y, they tend to be greater advocates for themselves, right? So a lot of those transactions are entered into as a partnership from the beginning. So there really isn't a whole lot that's happening without there being communication and in a cohesive plan going in. But I think the bottom line is still the same, which is, you need to have identified, or you need to identify all of the assets that exist within that marriage. If you are a blended family, or you came in, maybe later on in life, and you have assets that you acquired prior to marriage, those things are considered your separate property. But once you get married, they can become community property, especially if you're in Louisiana. But if you're in Georgia, that may look a little different, because we are not a community property state in Georgia. But the point is, you still want to make sure that if there's something that's separate, or something that you inherited and you want it to remain separate, that you make those types of provisions, prior to your marriage. And then further, once you're married, really come together and decide, how do we want to dispose of these assets upon our death? You want to make sure that, husband, your wife is taken care of, wife, your husband is taken care of. And then you want to take care of the children after that. And so those are just things that it really boils down to communication and making sure that is on the same page.
That helps me transition into the next question that I'm going to yield to you, Attorney Fortson, and that is, what are some then common financial planning mistakes that women make, and how can they be avoided?
So I'm going to touch lightly on financial planning, because I'm not a financial planner. But from a legal aspect, I think the thing that matters most is how things are titled, how beneficiaries are identified. So when you're thinking about For example, when you purchase a home or if you purchase property, is that deed, how is it titled? Is it a joint tenancy with the right of survivorship? Because that's going to make a difference in terms of do I automatically assume full ownership of this property upon his death or not? So those are things that you want to look at. If you've got beneficiary designations, so with life insurance, your investment accounts, if you do not have let me say it this way, whoever you have designated as a beneficiary, that cannot be overwritten in a will or a trust agreement. So you need to understand that those beneficiary designations supersede any other document that you would have in place. So you really need to understand, you need to understand what your goals are. And then you need to make sure that all of your assets, all of your designations, all of the titling, the deeds, all of those things are in alignment with what you set out to accomplish.
Thank you. I'm gonna go to Miss Bay.
Yes.
Can you
So
expound a little more? That was very good, Attorney Fortson.
yes.
You said you were only going to touch on it a little, but that was very good.
Oh, a lot of times when people leave their jobs, they have 401ks that's there. And so just making a suggestion to make sure that they roll over those 401k investments to, somewhere that they can have access to them. And then, ultimately, they won't, be lost. Because a lot of times when I sit with people, they may have worked three, four, five places. They have money that they left behind. Sometimes they don't even know who, the holder is, how to even get in touch with those people. Sometimes I've seen where accounts have been hit with annual fees and have dwindled. So of course, being able to, move your money over, and you can just ask yourself, if would you leave your money behind to your ex-husband? No, you wouldn't. So when you leave, you need to make sure your money is rolled over to, with you. And then also taking a distribution or a loan from a 401k in the event that you are terminated or you leave your job, that loan balance is due. So you either need to pay it or you're going to end up having it count as income for the year and you're going to be taxed on it. So just remembering, being in that situation is a 20% early withdrawal penalty if you're, touching that before you're 59 and a half.
Thank you. So that transitions me to come back to you, Miss Bay, because you just expounded on something that I wanted to ask next. And that was, what strategies then can women use to protect their assets in the case of divorce or separation?
Okay. Well, I'm gonna pass on that one and I'm gonna look to the next one.
So let me go to Attorney Vance.
Okay, so protecting assets in the case of a divorce. So first of all, before the marriage, maybe we considered a prenuptial agreement where we entered into this agreement that we would have a separate property regime. So pretty much nothing became community unless we allowed it to. Even during the marriage, we have the opportunity to enter into a postnuptial agreement where we have to get the courts to approve that we now have a separate property regime. Because remember, when we didn't have a prenup, we married without a prenup. So we have a community property situation here in Louisiana. So Attorney Fortson, I know nothing about Georgia law. So, but here in Louisiana, it becomes automatic community property once we marry. So we might want to consider a postnuptial agreement at some point if we feel like things are going south, and especially if we have a spouse who does not is not financially prudent. We might want to consider separate bank accounts. That way, even if we don't have a prenup or a postnup, we can figure out things once the divorce occurs. We know what assets were mine versus what assets were his. Some other things that we could do is just making sure that we have our beneficiaries updated, as I think Attorney Fortson and Ms. Bay expounded on earlier. one of the situations that we have, and we're all probably familiar with it, if we've been divorced, we remarry. How do we want our assets distributed if something happens to us and we remarry and our spouse has children? I have my own children from my previous marriage. We probably need to set some things in order there to make sure that our children or my children are covered, versus my assets being distributed to individuals that might be strangers to my children. So that's something to consider in a second marriage, or even after, divorcing. If I have adult children that I'm leaving assets to, and I might not think that their spouses are financially prudent, then how do I want to set things up to make sure that if I leave them a legacy, then their spouses don't go and basically rob them blind, for lack of a better term. You can set up a trust for your assets to go into, and they're distributed to your heirs in a certain manner, and you would determine how that distribution is taking effect. Those are all things that I would say that a woman can do to protect herself. I'm sure there are others, but my mind is going blank right now.
So with that being said, because you were talking about divorce or separation, with the women who possibly don't remarry or unfortunately their spouse passes, how should single mothers or widows plan for the financial security of their children, Attorney Fortson?
So I think, there's a couple of things. I think the first and maybe primary thing is, one, it depends on how much you've accumulated, right? But I would say that there's some other things that you have to consider. So if you have minor children and, you want to consider who's going to be, the guardian or the tutor, who's going to be able to take care of those children in the event that you pass away. So those are things that could be accomplished in a trust agreement, where you could appoint or designate someone to do that. The trust also will allow you to, determine where, at a particular age, I want my children to, to receive this. And then, at another age, they'll get another distribution. So I think, when it comes to that, the trust is probably maybe the strongest document that you could have in place. And then I think, let's see, the other part you asked about single mothers. Let me see, I had some notes because I wanted to make sure that I didn't forget. And then I think something else that I want to kind of bring up too is that there's this element of privacy, if you will. So if depending on how much you've accumulated, and depending on what your family is like, right? So, you may not want everyone to know everything that you've accumulated in your lifetime. And so one of the benefits of having a trust agreement is that you are able to bypass your assets being made a part of public record. So when you have a will and you just have a will, you list all of your assets within a will, and that will goes through in Louisiana succession, or in Georgia it goes through probate. Well, when you file with that court, it automatically becomes public record. So everything that's listed, now everyone knows. But if you have a trust agreement, you don't have to file that with the court. So all of that stuff remains private. You can still designate and give instructions, and you can actually be a lot more specific with that trust if you, to avoid the probate process, but also to accomplish those goals that you need to accomplish. So I think that, for women, whether you're single, whether you're widowed, that is something that you really want to consider. And then I think too, again, going back to the beneficiaries. So making sure that you have identified, people that can be responsible for that. Now, the other thing is you don't necessarily have to have an individual be a beneficiary. If you set up a trust, you can have the trust be or the trustee of the trust be the beneficiary of all of those things, whether it's your life insurance or your investment accounts. So again, you can have all of that going into that trust, and then you can have it distributed accordingly, and you can have multiple trusts. So you can have some that can be, that you would have control over, that you can, revoke or amend while you are alive. And then you can have another trust that never gets amended. So there's different strategies that you can put in place depending on what you have to make sure that you are, accomplishing the goals. So, things you want to consider: are your children financially responsible? And if they are not financially responsible, then you want to have some spendthrift provisions or some provisions in your trust agreement to make sure that creditors can't, that they'll have a harder time getting access to any assets that you've listed. So there's different strategies. I think ultimately you want to speak to an attorney. You want to understand, you want to be able to discuss or identify, what your goals are. And then you also want to kind of take into consideration who are all of the people that you're trying to leave something to, and how responsible are they. And then you want to begin to set, different strategies in place to make sure that you don't, your stuff doesn't disappear with that next generation. Right. So those are things that an attorney can help you plan for.
Thank you so much, Attorney Fortson. Can I go to Ms. Bay? Can you give us some more information on this?
Yes. So, as far as single women and widows, just helping the financial security of their children, putting in place an UDMA or UDMA, and basically those are um, parents being the custodial over accounts for their minor. And let's just think about this. If you're investing $25 a month for your child, just say you started that when they were born, and you did that until they were 35. That actually at a rate of that, which is the average rate of the S&P 500, 10.15%. Um, Guys, that's $100,000. Okay, so how many of us here that are listening, when we were 35 years old, our parents gave us $100,000? Okay, that's what could be done, for our minors, and someone single, they can be able to do that. Also, just making sure we have life insurance in place, not death or burial insurance. We're talking about life insurance, and we know that that is for the living. In the event something prematurely happens to the parent, and a guardian or grandmother get the children, that puts a hardship on them. But if they're coming because they're allocated monies from life insurance, that actually will allow them to, continue, living vibrantly, as they should. So, I always encourage young women while they're young and they're in good health, go ahead and lock in those high quality amount of insurance at that low cost. And I assist, families with putting together affordable insurance plan. What kind is best? It's the one that you can get a whole lot and pay a little for. And then of course, one more thing: responsible women make sure that their spouse or their partner have life insurance. Okay.
While you're
So when
talking about life insurance, I have to ask you at the same time: are you talking about term?
well,
Or let's go into, what do you advise is the best?
what
Because
did
there
I
are all these
say?
myths about term. So what do you
I said,
advise is best?
what kind is the best? The kind that you can get a whole lot for a little, for to pay less. Okay, so where can you go to where you can get a whole lot and pay little? And I mean, that's term. That's pure insurance. When we separate our insurance from our investments, we know how well investment accounts do. So, but again, responsible women, we make sure that those spouses and partners are covered, so that in the position, let me say, and we be either the owner or we be the beneficiary. So in the event that something happens, guess what? We know that the children and the family, will be cared for. Okay. Thank you.
So I want to start this next. I feel like that was a good transition into, so then what estate planning tools can help women manage and pass down their wealth effectively, in addition to some that you've already named, Miss Bay. Are there any additional ones you could think of that can help us on tonight?
And I know they have been touching on trust and putting that will
Mhm.
in place. I'm gonna let Attorney Fortson continue to talk about that.
Okay, well let me shift to Attorney Vance.
All right. So the question is, what tools can help them to manage and pass down wealth effectively? So I do
Yes.
want to. The conversation has been great, and Attorney Fortson was mentioning some things about what a woman can do to make sure that her children are covered. One of the things that I want to harp on is young women or women of any age that have minor children. Make sure that you select a guardian, that you name a guardian that you want, that you trust to take care of your child if you become incapacitated or if something unfortunately happens to you and you're no longer around. A lot of times we fail to take care of that particular piece and we put in place our financial plan and our estate plan, and then our children land in the hands of someone who, while they have guardianship or legal custody of the children, they're not financially responsible. And so they blow through your child's inheritance, and may not even do a good job at taking care of your child. So you want to make sure that you have thought that through in its entirety. Sometimes we allow children to fall into the hands of the grandparents who, they've raised their children. They don't want to raise young children anymore. So who is that responsible adult that you can name that will not only take care of your child, but also not only take care of them physically, but take care of them financially also. We do want to make sure that when we do our estate planning, that it is not a one and done experience, that we don't just go to our financial and legal experts and we get that will and we get that trust put in place, but then we never revisit it. We want to make sure that our will is comprehensive and that it definitely states our plans for what we would want our future to look like with regard to the disposition of our assets. We want to make sure that we have power of attorneys, durable power of attorneys while we're living. If we become incapacitated, who's going to make those decisions for us? Even in the sphere of our healthcare, we want to make sure we have healthcare power of attorneys. If I cannot make those healthcare decisions for myself, who do I trust will have my best interest at heart? Do I want to leave that in the hands of someone who will give up too quickly on me if I'm incapacitated, or someone who will fight for me if I become incapacitated and I can't make these decisions in their life or death decisions? Who do you want to trust with those decisions? Our other experts on the call have talked about updating our beneficiaries. When life changes occur, you want to make sure that you have those beneficiaries updated. You may have named someone as a beneficiary today that might not be the beneficiary that you want next year. A good example would be, we've talked about ex-husbands. Do you want your ex-husband to be the beneficiary of your retirement and your life insurance policies? Or do you want that to go to your children or someone else? These are all things that are important with regard to the tools that women have in their toolbox to ensure that they pass their wealth down effectively.
Thank you so much, Attorney Vance. And I'm looking at the time. It's so many topics that I want to cover, but I'm gonna have to shift to long-term financial security. And I want to start this with Miss Bay and ask, how can women plan for long-term care costs, particularly if they may outlive their spouses?
Yes, and so I want to look at again being able to put in place those investment accounts, because just taking advantage of the time and allowing your money to grow will allow you to have, the liquid assets that's needed in when you get to retirement for, medical costs, and even leaving something behind, for your family. So just utilizing that, maxing out those Roth IRAs, it definitely, will perpetuate your liquid assets.
Thank you so much. So we know now there are, I think one of you all touched on it earlier, in stating that times have changed. Women are killing it right now. Women are entrepreneurs. Women are just leading industries right now, right? And so for those who are looking into getting into some of these things, but they are afraid as it relates to some of the financial aspects of it, what financial and legal protections should female entrepreneurs and business owners have in place? And I want to start with Attorney Fortson on this matter.
Absolutely. So, as you know, when you are forming your company, what if you are forming a corporation, then you should have bylaws. If you are forming a LLC, a limited liability corporation, then you want to have an operating agreement. If you are forming a partnership, then you want to have a partnership agreement. All of these agreements are critical for many reasons. One, if it's more than one person who's forming this entity, then that agreement will specify exactly what's going to happen. It talks about, the percentage of ownership. It talks about, or it should talk about the percentage of ownership. It talks about, how you're going to take on new members or new people into the organization. It talks about how people will get, how the distribution of revenue is made. And it also talks about what do you do in the event of death, or disability, or for whatever the reason you want to exit. So any type of dissolution strategy. So that agreement is important when you're first starting out, and you do it in the beginning while everyone's getting along, right? Because in the event that something happens, that is not the time to try to figure out what we need to do. So do it early, do it in the very beginning stages. I think the other thing too is when you're thinking about that, you want to also have a plan. The same way that you've got a plan for your personal assets, you need to also have a plan for your business assets. So anything, any business accounts, any business debt that you may have, all of that needs to be accounted for within, your estate plan. So those are things that, as for women, as we are, branching out and doing a whole lot more, we want to make sure that we don't neglect to include that in our overall, plan and strategy. I think the other thing too is that, once you are in business, then as you are conducting business, there are certain contracts that you're always going to have. So if you are a service provider, then you want to make sure that you've got some type of service-based contract that you will use when you're working with any type of, client that you would, provide a service for. If you are, selling goods of any kind, then you also want to make sure that you've got some agreement with anyone who may be suppliers for the goods that you produce, or for anyone that you might sell to. So in any relationship that you're entering into, whether you're providing a service or a good, or you're bringing on a partner, you need to have a contract that specifically spells out all of the different things that you're going to do inside of that partnership, or inside of that business relationship. So contracts, put it in writing, because people forget. We agree, and then we forget what we agreed upon. So always put everything in writing and have contracts for those that are signed. And it says that these are the final agreements. And if you want to make any changes, we agree that we're going to do it in writing. So those are things that women should consider when they're entering into business.
Thank you, Attorney Fortson. I believe she already started touching on what I wanted to cover next, and that was how can women protect themselves financially when starting a business with a spouse or partner. But Attorney Morrison Vance, do you have anything to add to that?
I would just say, because Attorney Fortson did a great job, just make sure that you have the proper business entity set up, and you consider the tax consequences associated with those businesses. You want to make sure that you have systems in place, and that you have those professional advisors to assist you with that. We have entities that get in trouble because they didn't pay their employer taxes, or they didn't pay some type of tax that they should have been paying with regard to that business. So they get in trouble with the IRS, and maybe even the workers' comp entities, because you have to have workers' comp insurance if you have employees. just making sure that you have those systems and mechanisms in place to make sure that you are in compliance with all of the regulatory type requirements for your business. Also, making sure that you, like Attorney Fortson said, that you have all of those contracts and agreements in place in writing, and that you have the support of a professional who can help you to think of the different ways that things could go wrong so that you can cover that in your written contracts. What happens if a dispute occurs? What happens if we need to dissolve the business because we can't resolve that dispute? And then finally, the last thing, and I'm not going to elaborate on it because we have Ms. Sister Bay on the call who can elaborate further on these type of things, but insurance is key. Business insurance, professional insurance, key person insurance. All these liability insurances that are out there to ensure that you are protected personally, because sometimes, regardless of what type of business entity you establish, if you have certain missteps, there's a possibility of them coming after you personally as a guarantor. So you just want to make sure that you have all of those experts in place. Don't be afraid to pull on their knowledge and expertise and make that expense, because it benefits you in the end to have those protections in place.
Can I add something to that?
Absolutely.
So even if you are entering into business with your partner or your spouse, you should still have an operating agreement or bylaws, right? Because that agreement will also say what will happen in the event of a divorce. So you want to make sure that that is in there, because again, no one is marrying to get divorced, but it does happen. So you just want to make sure that that is there. So I just wanted to kind of
that's good information, Attorney Fortson, because
yes.
sometimes people don't think to put that in those business documents. So that's awesome.
And so I have to ask then, before I move to the next question, Ms. Bay, do you have anything to add to this one? Because it really is an important question that I think is paramount for discussion, especially amongst women.
The only thing I wanted to add, they did an excellent job with covering it, is just make sure it's no commingling of the personal money with the business money.
Yeah.
So.
And I'm sorry, can I just add one more thing to that?
Yeah. Yes, you can, Attorney Fortson.
Because if you commingle your personal and your business, event that your business would be sued down the road, if they can show that you never actually separated, then they can come after you personally. And I think that also touches on something that Attorney Morrison Vance said, where she talked about the personal guarantee. So as a new business, a lot of the time we're not cash flowing, right? So we don't have enough money coming in. So if you're going to try to get a loan, or you're trying to get, a credit card or anything, you typically have to put your personal information in there along with your business information. So that means that if the business at some point cannot make good on whatever that arrangement was, they can come after you personally. So that's something that you have to consider. And a lot of the times, if that personal guarantee is added, there's typically a clause that says you have no defenses in the event that you're sued, right? So if the business is bankrupt and can't make it, can't make that obligation, you don't have a defense as an individual to get out of it. So and that's a lot of time that's in the contract that you sign. I've seen it with SBA loans. I've seen it with, commercial leases. So any type of agreement that you're entering into. So that's something that you want to keep in mind, because that also is, in the back of your mind, that could be future debt for you personally. So just keep that in mind as well.
Thank you so much. So then, what are the best strategies for women to negotiate better salaries, benefits, and retirement plans in the workplace, Ms. Bay?
Can I just have one thing to say about that?
Absolutely. So, I told y'all this was an important question. We could probably have an hour on just this question, although we're not going to do that. We could though.
So when you get your offer letter, just know your value. Be an advocate of yourself. Do a little research. Okay, they have platforms out there like Glassdoor, maybe some other platforms where you can search. What are they paying other people at at other companies, this position that they're trying to offer you as a female. And if you can, your male counterparts, see what they're paying them, because sometimes they'll slip up and let you know that they're paying them more. But it's nothing wrong with asking for more. At most, what will happen is they'll negotiate and you get somewhere in the middle and not just, the first offer that they give you. So shoot the shot.
I
So may
like
I
that.
add to that?
Yeah.
Yes, ma'am.
So we talk about negotiating and getting the best salary for yourself coming in the door. But I would even suggest that once you're in the door, do great work, document your achievements, but also don't be so quick not to go the extra mile, because sometimes you're being watched for that next promotion or that next level. And so if your boss gives you an extra project, don't be so quick to say, I'm not going to do any more than what's in my job description, because it just might be a test. It
Mhm.
might be an opportunity for you to move up and you didn't even know it was coming. Go the extra mile, do the extra work. I'm not saying, do it at the expense of, your finances, your health, or anything else. But what I am saying is be cautious about not accepting those extra projects a little bit late, or doing that extra that is needed to get a project done, because somebody might be watching you and might be thinking they could be a good fit for this other opportunity that does pay more and that is a promotion. So be aware of that.
Can I
Thank
also
you.
may I add something to
You
that?
you can, but I really want to get to the questions in the chat as well. But then there's
Oh,
one more really important question, because we have so many mothers as well, and I just think it's going to be important. So before I will take the questions in the chat, I see y'all. Okay. I do want to ask, how can women protect their financial interests if they take time off from their careers for caregiving? And Okay, I will go ahead and I will give you 1 minute, Miss Bay, because I really want
okay.
to get to all these questions in the chat as
Yes.
well.
So I wanted to talk earlier. I have a 7 year strategy that I like to give my 20 something year olds. And I know you all have said, 20, but the 20 something year olds, in which, guess what? 7 years. They max out on their Roth IRA. I did have a picture that I sent, but I know they can't put it up. They max out their Roth IRA for 7 years and they stop and let it go. Okay, that way while they're caregiving, or if they can't contribute, they've already put in. And I'll tell you, it triples the amount that's needed for retirement. Okay, do it early. So that's what I wanted to share.
Golden information.
Mhm.
So we have a few minutes left. The way I'm gonna do this, ladies, instead of calling on you individually, I'm just going to, since there are quite a few questions, I will ask the question, and whoever wants to answer it, just chime in, and then we'll move to the next question. So it looks like the first question I had in the chat was from Miss Jackson. It was, if you have an ex-husband and he passes away, but he was remarried at the time of his death, who will get the Social Security benefits? Whoever wants to answer can chime in. Is that one of those questions where you need additional facts as an attorney?
So this is a different practice area, if you will, but
Mhm.
here's what I can say a little bit about, which is it depends. So so typically if he was remarried at the time, it would go to the spouse. But I have seen in case law where the previous spouse, who was maybe there during maybe the a good majority of the accumulation of those Social Security benefits, where she has sued for for a portion of it. But that's all I can say on that subject. I've just
Okay.
seen a case law where the previous spouse has sued for to be recognized to receive part of those benefits. But it would typically go to the person he was married to at the time of his death.
Okay. What life insurance, this is Lady Ellis, what life insurance policies are recommended?
As you know, I mentioned earlier, those kind that you can get the the high
You just
quality,
don't want to
low
name
cost.
them by name, huh?
So, Sister Bay, would you
Yes.
recommend a life insurance policy with a declining, what is it, declining value?
No, term. But
Okay.
you couple it with your investments. You have to have that. You have to have that because that's going to build your liquid cash.
Okay. Next question from Miss Stanton. When should a 401k be rolled over to a Roth?
Okay, to a Roth. Okay. So for the rollover of the 401k, you always want to roll it over to something that's like it. So it would actually roll over to a traditional IRA. And that way you won't get penalized. It got to move from like investment account to like. So it will roll over to actual a traditional IRA. You would do that in the event of, like I said, you've been terminated or you stopped working from a job, or at the time that you want to make distributions, then you can be able to roll it over to a different entity, something like an annuity.
Okay. Next question from Ms. Marsh. What is your philosophy on when you should access Social Security benefits? As soon as possible or wait until full retirement age? Who wants to take that one?
Well, if no one else takes it, I'll take it. I think that that's an individual decision that has to be made. You have to weigh the benefit of taking it sooner rather than later. As we know, you probably get more in Social Security the longer you wait. But I think that's a personal decision, and you have to make that decision with your financial planner or your spouse or whomever. Um, I don't think there's a just one answer for that.
Okay, I believe that may be the last question that we had in the chat. If I missed any, please.
One more.
Oh, wait, I'm sorry. This is Louisiana is the only state that honors the Napoleonic Code. Can you explain how this law affects a trust?
So I can talk about that a little bit, just from the perspective that so all states have some form of trust law that they abide by. So, you've got some states that will, that will follow the Uniform Trust Code, but then you have some states that have their own trust code. So the fact that Louisiana, is a Napoleonic state is not really relevant because they all states recognize trust. It's just that when you start to get into some of the nuances of a trust. So for example, even though you can have like a living trust or an irrevocable trust, once you start, getting into the details, then you start looking at things like special needs trust or self-settled asset protection trust. And so when you start getting into those different nuances, then you start looking at what the state's laws are as it pertains to those different nuances. So for example, Georgia doesn't recognize the self-settled asset protection trust. And that's essentially, well, I won't go into the details with it, but so in other words, there are different states that will recognize certain things. Or if you're looking at things like the Medicaid Asset Protection Trust. So as you're getting older and you're trying to, or you're thinking about as you get older and you're trying to, protect your assets, certain different states have a certain look back period. So if you look back so many years, if you've put all your assets into a trust, trying to protect and make sure that you can meet those qualifications, then, then like in some states it's 4 years, some it's 5, some don't have it at all. So in other words, it's really state specific. All states recognize a trust, but depending on what your goals are and how you begin to get nuanced in developing these other types of trusts, then you would really look at, well, what does that state's law say about this trust? So I wouldn't get caught up necessarily on the fact that Louisiana's, follows the Napoleonic Code. It really just boils down to just, what does any state say about, trust?
Thank you so much, Attorney Force. Oh, I'm sorry.
I'm sorry, Judge Jordan. I will just add that you also want to make sure that you consider, depending on the size of your estate, consider what the IRS says about your trust also.
Yeah. Because
thank you so much. And so to the women who knew that we were supposed to be doing a giveaway tonight, I don't think you all knew what you had to do to be able to receive that giveaway. So I will go ahead and announce who is the winner. And that is a document key lock safe. And it was to go to the person that asked the first question. And actually, I missed that the first question was asked by Miss Stanton. And I had skipped to the next one. I see Miss Stanton was at 6:32, and I started on the question at 6:39. So Miss Stanton, congratulations. You were the first person to ask a question. Therefore, you will receive the Century Safe giveaway. You are to pick it up from church on Sunday from Sister Karen Burks. Thank you so much. Okay, you guys, this was a fantastic discussion. We are 2 minutes over, but I kind of figured that would happen because it's such an important discussion that I just think we don't have enough. And so I feel like this was just a great space. This was an amazing panel. And thank you for what you guys are doing in the community and for what you are doing for our women. With that being said, I want to thank everyone for joining on tonight. I want to invite everyone to church on Sunday for our 8 a.m. or 11 a.m. service. And again, thank you everyone for being here. And until next time, be blessed. Unless anyone else has anything. I don't know if Ms. Burks was going to hop on, but if not, I will just say to everyone, have a good night. Be safe in the weather that is impending weather. And thank y'all for being here.
Thank you.
Thank you.